A very good evening to you all, friends. I am Sanjeev Singhal, Central Council Member and Chairman, AASP, Chairman, Public Relation Committee, and Vice Chairman, Sustainability Reporting Standard Board. I welcome you all to this 110th program for this council year for AASP, which is on SA 505 and 560 external confirmations and subsequent events. On behalf of my Vice Chairman, Sri Vishal Bhai Doshi ji, I welcome you all to this program. Friends, it's been our endeavor to organize a program on every possible subject within the audit domain. And we are bringing out a lot of technical material, a lot of support material for our members. For example, we have come out with the auditing standard checklist. We have also come out with the audit working paper templates, which I believe will go a long way in helping our members in ensuring the compliance with the auditing standard and the other auditing related pronouncements. Friends, from the Center of Audit Quality, we have also brought out a tool for materiality, computing materiality. And also during the bank audit season, we brought out that publication on the Excel utility on the bank audits. Our expert helpline on audit related matters is already going on. It's available up to 30th September. Members can avail this free of cost. Friends, with this background, let me talk about today's topic, external confirmation and subsequent events. It's very, very important that the balances, for example, bank balances, debtor, creditor, etc., the auditor obtain external confirmation. External evidence is always considered to be more reliable than the internal evidence, than the information produced by the entity. So, at times there are challenges that the people do not respond. However, auditor should make every possible effort to obtain these confirmations. And then confirmation should be obtained directly by the auditor on his email ID or on his address. These should not be routed through the management. If I had to talk about subsequent event, the event occurring after the balance sheet date, but up to the date on which these are approved by the management, by the board of directors, they also needs to be examined very carefully to see whether these are adjusting event or non-adjusting event. Adjusting events will be those which will require an adjustment to the items in the financial statements, and whereas non-adjusting events will be those which will not require an adjustment in the financial statement, but may require a disclosure in the report of the approving authority. To cover these aspects today, we have one of our very beloved and very renowned speakers, C.S. Suman Chadda ji, who is the managing partner of TR Chadda. My relationship with him is not of a mere professional. I've been student of Dr. Reena Chadda, spouse of Suman sir. So Dr. Reena Chadda, I feel that whatever I am today, it's because of my school and college. And Shri Ram College of Commerce will always hold, a special place in everyone's heart. Suman sir is also from Shri Ram College of Commerce. I am also from Shri Ram College of Commerce. And Dr. Reena Chadda, taught me Indian economics, and those fundamentals were so strong that, I could do well in my exams and in my graduation. So I always remain indebted to my ma'am, Dr. Reena Chadda. I know Suman sir from last 29 years now, 1994 to 2023. He's our very esteemed special invitee, and his firm is a firm, which is holding the flag of the profession high. He contributes to the cause of the profession very extensively, and I'm thankful that he agreed to once again take out time for our member. I know how hard it is for a person like him to be away from work for 2 hours, but we have taken his 2 hours. Thank you so much, sir. You've always been very kind to us. And I also have the pleasure in saying that this program is hosted by the Ambala branch. C. Deepti Jain was the chairperson, whom I interacted a few days ago on my en route from Ludhiana to Panipat, and she really helped. So thank you, Deepti ji, for hosting this webinar. And may I request you, Deepti ji, to say a few words, and then request Suman sir to start his deliberation. Thank you. And over to you, Deepti ji.
Well, thank you, sir, for the honor. And first of all, a very good afternoon to all of those present, our CC member, Mr. Singhal. It was a pleasure to meet you, all the other members, and a most honored guest, C.A. Suman Chadha, who since 1984 he's in practice. As Mr. Singhal rightly pointed out that he's from SRCC, but one more thing I'll add to his resume, that is he's a gold medalist from Ronak Education Foundation for securing first rank in CA final exams in north of India and second in whole of India. That is nationwide he was second and in north he was first. He also has a law degree and he has been a special invitee to the National Advisory Committee on Accounting Standards for implementing accounting standards in India. So we can rightly say that he is the pioneer behind accounting standards in India. And also Internal Audit Standard Boards and the Auditing and Assurance Standard Board and the Committee of Institute of Internal Auditors, which is affiliated to Institute of Internal Auditors, USA. And he has also been in the chair of the Corporate Affairs Committee of the PhD Chamber of Commerce and served on its managing committee. He has also served as independent director and is on many boards. And to add to this long list, last but not the least, he is the co-author of 2 books on corporate law and is a regular speaker at seminars and professional organized by various professional organizations. So I'm honored to welcome you, sir. And I hope that all of us will benefit by your knowledge and expertise. Welcome, C.A. Suman Chadha. You're most welcome. Kindly, sir.
Thank you, Dipti ji, and of course for the very, very kind words as always, Sanjeev. You are so close to my heart, and I will definitely convey your thoughts and sentiments, which of course Reena knows very well. But it's always very happy to interact with you and with the entire ICAI tech team for inviting me and giving me this honor. Anything for the profession. Topics are well known. These essays, both Essay 505, confirmation and subsequent events, are with us for the last more than a decade, if not, 2009, 2010. And somehow their rigor has increased in the last several years, thanks to Satyam was the biggest trigger for confirmation of balances. And of course, subsequent events is something, which is so much now because of the limited reviews immediately along with the account. So if there's anything, they have to be captured. And there's so much happening in the corporate world that we need to be totally abreast with the business to see what is really happening, because the day I signed the report, I should be well aware of what is happening in the company rather than doing a post-mortem or a historical analysis, which we normally get bogged down with. So without much ado, and thanks to once again to Chairman Sir Sanjeev ji and Dipti ji from Ambala, I'll dive into Essay 505. I have a small presentation. Let me see if I can push the screen. Let me see if I can share screen. Yes, can you see my screen?
Yeah.
So this, I'll take it down. Maybe this will, I don't know.
Sir, again gone.
Gone?
Yes, sir. Not visible.
Okay. Share screen. Share.
Yes, sir.
Yes, sir.
Now it is fine, sir.
Right. Okay.
Fine, sir.
So, how do I? Yeah, scope of Essay 505. It applies when the auditor plans to perform external confirmation procedures. So this is a basic concept. We'll build it up slowly and actually get into the nuances and the interesting part where, there could be certain ambiguities or thought processes where we need to have more judgment and more knowledge of how practically this whole thing works effectively. So one is a perfunctory way of dealing with this. One is an effective way, and that's probably what we will focus on. But we'll run through the essay so that we cover the entire gamut and we don't miss out anything in the process. So the whole essay explains that these procedures are commonly used to collaborate information obtained from the client, nothing new. And we must also be wary of the fact that it does not address inquiries regarding litigation and claims. Typically, we have another essay, actually essay 501, if I may want to talk about, audit evidence, specific considerations for selected items that we are not discussing today. What is the objective of my essay 505? Typically, the objective is very simple, as we understand. It is to obtain audit evidence through external confirmations to support the assessment of relevant assertions. Typically, what are the assertions we are normally going to be tackling when we want to obtain audit evidence through these external confirmations? One, existence or a occurrence, that is the first assertion. Second assertion could be completeness. Third assertion could be rights and obligations, because there could be confirmation on agreements, and not only for banks, etc., as well as covenants on security, unsecured, secured, etc. Then the assertion on valuation or allocation, because one bank loan may be spread over different entities, how they are reflected in my books vis-a-vis the books of my sister concerns, and of course how they are valued in terms of the assets and liabilities. This is a very important assertion, and probably the most important. And finally, the ultimate presentation and disclosures, whether in the accounts or in the notes to accounts. These are the 5 typical assertions which, as an auditor, I'll have to be focusing on, and it covers a large gambit of activities and areas, not only on banks, which we normally immediately relate to, or debtors or creditors. So these are the 3 common ones, but there are so many other confirmations which normally we should be getting into or do normally get into. Also, the whole objective is also to explain that these confirmations provide independent, one, and reliable evidence from third parties, which enhances the quality of audit procedure. The quality of audit procedure and the quality of my documentation enhances where it is in writing, it is from third party, it is obtained directly. There is a hierarchy of comfort which I draw. So all these points are ticked when I independently obtain confirmations from third parties in a documented form and not through an oral process. We have the handbook of essay which talks about certain aspects, and I'm just going to read 1 or 2 aspects out of this. I'm going to read it out. Audit evidence is more reliable when it is obtained from independent sources. Also, it obtained directly by the auditor, then by the client, and also, as I mentioned, it is in a documentary form rather than in an oral form. So these are the evidence enhancing aspects. What are my key definitions? I'm familiar with this, but let me run through it for the sake of covering the entire gamut. External confirmations, independent verification of financial information directly from third party. Directly is key, and independent is another keyword. Positive confirmation request. This talks of requests for confirmation that require a response. We need them to do something for me to get a positive confirmation request. And on the other hand, negative confirmation request, as the name connotes, these requests for confirmation where a response is only required if the recipient disagrees. So I say, if you agree, don't need to interact with me, don't need to respond. But if you disagree, please let me know why and how you disagree. Blank confirmation. This is another form of confirmation, where a confirmation with some information omitted, like the bank balance or the debtor's balance. So we want them to write something there so that it is not a perfunctory exercise that, okay, I confirm the balance or I do not confirm the balance. Now they are obliged to actually put in the figure to be completed by the confirming party. So this is very interesting because it gives me a little higher level of confirmation, because I am getting the amount from them rather than just putting the amount and they saying yes or no. But it has a drawback. The fact that they have to put the amount as well as check from their accounts, etc., and be very sure that they don't put a wrong amount, etc., the onus falls on them rather than on me. So the chances of a response, or for them to not respond or leave it blank, etc., are higher in those cases. So depending on how my past experience is and the plethora of sample I've selected for this, I need to use this very carefully. Non-response, as it says, a failure of the confirming party to respond or fully respond to a positive confirmation request or a confirmation request returned undelivered. Even if it is undelivered, is not reached him, the mailbox, there is a rejection, or the speed post, or whichever, or by hand it is gone. I haven't received a response, or it's not been delivered, non-responsive. Exception. This is critical because it enhances my audit requirement, a response that indicates a difference between what I have given in the amount and what is received back from them. These are the key definitions. What is the basic procedure? Let me run through the basic procedure. First, I have to determine the information to be requested or confirmed. So here again, I'm going to read a quick paragraph on my essay, which talks of simply, they may also use to confirm terms of agreement. So what all information I cover, not only bank balances, account balances, terms of agreements, I was talking about various other aspects. Second, contracts. Third, transactions between an entity or other party, some transactions which are specific. Then to confirm absence of certain conditions, such as a side agreement. So if a contractual agreement between party A and party B, there may be an overriding agreement which somehow, as audit evidence, I'm not able to lay my hands on. So when I confirm that, okay, this is the only agreement between, especially on a secondment of major contracts or between related party, or where there are outsourcing arrangements which are germane to the very business in which I operate, whether it's on the P&L side or the balance sheet side, I need to confirm whether there is a side agreement to which kind of deviates from the original agreement, which is available to me as audit evidence. So this is also very important. It helps me to go through that process very carefully, as well as covers and gives me comfort as far as the whole audit procedure is concerned. How do I select the appropriate parties? This is again very, very interesting aspect. We'll come to it as we go along. Basically, how the samples are taken, what is the universe I'm dealing with, what is my past experience, how relevant are those balance sheets, what is the risk of material misstatement, and the risk assessed in terms of verifying or validating those items in the balance sheet or P&L account or in the notes to the account. Another thing is I have to be very mindful is designing the confirmation request. There are templates which is given in the guidance note. I have to be very careful how my wordings is there. What is the letter of authority I'm attaching from the management along with the confirmation? Which party am I addressing to? Am I polite? Am I kind of giving them adequate time? Am I making it as a request or a directive order? So that tone and tenor is also very important. Rather than make it more abrasive, we need to be more gentle, but at the same time bringing all the facts, clarity in terms of what we expect the confirming party to do, whether it is a negative or a positive or a blank confirmation. Then, of course, the very fact of how I'm going to send these requests in the electronic form or through post, registered AD, physically, etc., or seeing on the screenshots of the websites of various banks or institutions, if those balances are available, that something is also the portals, not the website. So, and of course, if there is something critical and I'm not getting a response, is there a process for a turnaround time which I've given them? So I have to give adequate time for them to respond. 1. 2, I should have adequate time for my closure deadlines. So I have to work backwards. So whether I send the confirmation right at a much early stage or fag end of my audit procedure, that's also very important. So all this is relevant. We need to be very mindful that this is not going to be just exercise for my documentation for a peer review, but actually this can be very useful to me as an auditor and give me a lot of comfort in terms of various aspects of my audit procedure, where I don't want to be caught in something which I have missed out. Let me go ahead. How do I design the confirmation request? What is the importance of well-designed? So this is something, factors which are important. I have to go through again a quick paragraph on my essay, which I'm going to read about. paragraph A3 and A4, which of course you can read these essays after the presentation so that you are able to relate them and assimilate them in from your perspective, whether you're new to the profession or you're already doing this for some time. So designing confirmation request requires subtlety. The design may directly affect the confirmation response rate. This is important. If I don't design it properly, I may not get proper response from a large section of my people to whom I have reached out to. And the reliability and the nature of the audit evidence obtained from these responses will also depend upon how I actually design it. So very important. Factors to be considered while designing. One, the assertions being addressed. What is assertions? What are the one of the five assertions? One or more of them actually I have in mind. I should know my objective very clearly rather than just doing it as if it's a required checklist in my audit guidance. Two, what are the specific identified risks of material misstatement which I am going to be addressing in this? This also includes fraud risk. So that also we have to be very mindful of, because I have to do a fraud risk assessment of the items where the possibility of fraud is there. And my confirmation procedures would then be enhanced to mitigate or ensure that the fraud risk actually is covered. And my documentation also speaks of that. Thirdly, the layout and presentation, as I just mentioned, the tone and tenor. And of course, the most important thing is my prior experience of audit of that entity or similar engagements, whether it be trading or whether it be construction or whether it is in export-oriented companies or whether there is services companies. Typically, what is my response rate for debtors, creditors, contracts, etc.? I need to be very mindful of. Then only my confirmation can be effective. Then what is the method of communication? Where I felt that the response is going to be fastest and most rewarding in terms of the responses, accurate responses. It could be paper form, electronic form, or any other medium like going to the portals, etc. Then, of course, without the management's authorization or encouragement to the confirming parties to respond to the auditor, the whole exercise becomes more and more difficult and complicated. Confirming parties may only be willing to respond to a confirmation request containing management authorization. So most of the time, the banks will not deal with the auditor. They have no privity of contract with me. I'll have to necessarily attach the authorization letter, which could be generic or it could be addressed to the specific bank. Most likely, it should be addressed to the specific bank, authorizing the banks on the behalf of somebody senior or somebody who the banks would recognize as having the authority higher up in the management. It could be managing director, CFO, etc., depending on what they would be normally recognizing, rather than a junior person, and they may disregard that, along with my confirmation, which is my letter, my letterhead, etc. So all that is very important. I just cannot just send it and then hope that they will respond. And after 2 weeks, I've realized they've not responded. And then I don't know what to do. My audit closure date is coming close. Lastly, the ability of the intended confirming party to confirm or provide the requested information. So suppose I ask that the entire transaction for the year, plethora of transactions running into several pages, the invoice-wise details or part payments, adjustments, etc. Am I getting into that details or giving them only the balance confirmation or maybe the last few invoices to confirm? All that will play a very important role when I design my confirmation request. Then again, so all these factors have to be there, and I am able to then get going as far as designing and confirmation is concerned. Next would be other matters to be concerned. What are the other matters will have to be concerned? What are the methods of, this is already again I've discussed. So typically positive response at how we are looking into it is also so relevant so that we are able to get going with this very quickly. There's another, aspect which I want to read out from the essay, which is talking about the risks associated. Because a response to a positive confirmation request ordinarily is expected to provide reliable audit evidence. However, what are the risks Even if I get something positive and confirmed, I still carry a risk. This is what is mentioned in the essay. It talks about the fact that there is a risk, and the risk is that the confirmation party may rely on the confirming request without verifying the information is correct. They may just say, okay, aaya hai, bhej do वापस, okay hoga, as a regular party, not realizing that some disputes are already there and I'm not able to, bring it out in my response as a confirming party. Also, this can be corrected and maybe reduced by using positive confirmation request when not to state the amount. So on the other hand, you said blank confirmations, there may be no response because the effort is higher. So I have to be very mindful of that. Typically, there may be cases where there may be interpretation of, where the response is fraudulently changed before it reaches me. I'll talk about that a little later, but that's also very important. So as I mentioned, we are covering a 360-degree of the audit: bank balance confirmations, account debtors, creditors, stock held by third party, property title deeds held by third party, investment purchased but delivery not taken. Now, of course, we have shares in DP, etc. Earlier, depository participants were not there. There could be other custodians. Loan from lenders, financial institutions, covenants. There will be plethora of institutions in India and overseas, ECBs, etc., consortiums which operate. And there may be different kinds of facilities which I'm enjoying. Guarantees given on behalf of various other companies, related party companies, subsidiaries, fellow associate companies, etc., and especially in a larger group, and loan outstanding share application money. And there could be certain subtlety in terms of how we are able to get this going. There are practical challenges under each of these heads, but definitely we have to go through this process, not only on the top 3 items, but almost all of them. Here, just to understand this little more clearly, positive confirmation is so much better than a negative confirmation. There is no comparison. Rather than saying the negative confirmation, I'm going to reach out and, my database will be much larger. And if I don't receive a response, I'm happy that nothing is wrong. But direct confirmation from independent third party is not with me. I have no clue whether they have read my letter, they're wanting to respond, there is a dispute, etc. Nothing comes to my file. So I am left and I am largely at sea. Similarly, enhanced reliability, transparency, because I'm directly interacting. Detection of misstatement can reveal potential misstatement of errors, because this is then black and white. X amount versus Y amount. I can reconcile it. There could be dates different than, I may set the confirmation on 28th of February. They may send it on 31st of March. They may have adjusted future payments and given the current balance. So all that is possible. So this can be easily reconciled and worked out, rather than something which is vague and ambiguous and giving scope to something which is not giving me effective and a positive confirmation. And credibility, of course, is going to be there of financial statements enhances considerably. So I should not use the negative confirmation request as a sole substantive audit procedure to address the risks unless all the following conditions are met. All the conditions, A, B, C, D, E, A, B, C, D. Auditors assess risk is low and they have obtained sufficient and appropriate audit evidence, SAAE. I'm using it as an abbreviation throughout my presentation, but it represents sufficient, appropriate audit evidence regarding operative effectiveness of control relating to social. The risks are low. 2, population of relevant items comprising large number of small homogeneous account balances, transactions, and conditions. A trader having, B2C trader having small balances across various locations where the money is received within the next few days. It's only a process of check clearing or some, payment digitally coming, and the clearance happens. And even when I'm signing the balance sheet, all would have cleared except the doubtful or sticky advances. Their negative confirmation is possible. So very low exception rate is expected. So where, the exception rate is low, where we understand that there would be clarity in terms of how the response would come, even if I'm sending negative confirmation request, then alone I should look into it. And also, I, as an auditor, am not aware of any circumstances or conditions that would cause the recipient of the negative confirmation request to disregard the request. So I'm aware that there would be, senior, mature people who would be very mindful of the fact that a negative confirmation request is given. They will not just let it go. And if there is something which they need to report, it comes to me very clearly. So I will just go on to one more slide, which is from the essay, and then move on to certain other parts. I'm just locating that. Meantime, let's talk of what happens when there is a management refusal. For example, when I want them to give a confirmation and allowing me to authorization to go directly to these third parties, if there's a refusal, then how do I tackle this? This is something very important for me. And I'm going to read out from again the essay where they talks about certain aspects, which just give me, I think my essay is missing from me. I have got it now. Limitation on the scope of audit, because firstly, it is a limitation by audit. Secondly, the inquiring the reasons for the limitation. Why is it that the management is not going to allow me or preventing me from going directly to certain parties or carrying out this exercise? Is there a legal dispute or an ongoing negotiation on the resolution which may affect ultimately the confirmation request may kind of give some kind of disadvantage or may affect the whole negotiation process or an arbitration proceedings or some disputes? If there is that be the case, it could be a genuine reason why the management has refused to allow me to go for the confirmation. But I should then document that process. Will also help me to document what was the dispute and is it a genuine request for the refusal. Without that, it becomes very difficult to accept and gives me a higher risk of material misstatement. And also then I have to start evaluating the implications of risk of material misstatement and audit procedures, and also jump to SA 240 on the fraud risk assessment, because that increases my fraud risk and the whole gamut of activities which I have to do in terms of, allaying my this risk, enhanced risk of fraud risk, to confirm that the financial statements are actually indeed free from material misstatement, even though I have not been able to reach out to certain class of confirming parties independently for confirmation. And then, of course, under SA 314, I have to perform alternate procedures. Without that, it will not be complete. My audit will not be complete. And for that, I need more time. So the timely initiation of this confirmation activity is so important for me. And I'll come to certain aspects which are actually given in the guidance note how to deal with that. Because the refusal by management to allow the auditor to send a confirmation is a limitation I've already explained. And therefore, there could be so many implications, where I'll have to go through. So definitely timely action on this confirmation process. And if there is any refusal, how am I able to tackle this? Even much before my audit is closed, I need to be very mindful of. If there is a refusal, I have to have an action plan. Here again, I would reach out to my essay, which talks about various activities I have to do before I am able to bring out this whole closure of this point. Because if the auditor concludes that the management refusal to allow the auditor to send a confirmation is unreasonable, or the auditor is unable to obtain relevant and reliable audit evidence from alternative audit procedures, then the auditor shall communicate with those charged with governance in accordance with SA 260 which is basically communications with those charged with governance, and bring it to the notice of top management, the board, the audit committee, the independent directors, whatever the hierarchy of those charged with governance is there, and also shall determine the implications of the audit and the auditor's opinion in accordance with SA 705. Because 705 is clearly modification to the opinion in the independent audit report. So qualification, emphasis of matter, all that is then triggers. So a chain reaction happens, my friends, as to what will happen if there is a refusal. I have a refusal. I see that the refusal is unjustified. I do an alternative audit procedures. That is also not able to satisfy me, because they cannot completely alleviate the enhanced risk of material misstatement, or on the other hand, the fraud risk assessment. And therefore, I'll need to tell the management at the topmost level, these are my limitations, and it may have a serious bearing on my ultimate opinion in terms of the fact that I'll have to deviate from the typical true and fair view. There is a modification which can be triggered under SA 705. So it is so critical that I cannot, leave it for a normal activity, but a very enhanced level of an audit procedure is required to be able to address that. Similarly, there could be factors raising doubts on the reliability of the response. Here, I have to obtain further audit evidence to resolve doubts. And because a response to a request is not reliable, and then I have to implications on assessment of related nature, basically which may result in material misstatement or timing and extent of audit procedure. So therefore, if the confirmation results are not supporting me, then I'll have to be very careful of some of the facts which I'm going to talk to you from the essay itself. Essay talks about nine. 1 second, 11, yeah. So typically, there could be cases where I am not getting full comfort in terms of what has really happened. The reliability is low. One, SA 500 actually indicates that even when audit evidence is obtained from sources external to the entity, circumstances may exist that affect its reliability. Why? All responses carry some risks, as I mentioned earlier, friends, of interception, alteration, or fraud. Such risks exist regardless of whether a response is obtained in paper form or electronic or other medium. Factors that may include doubts about the reliability include: one, was received by the authority auditor indirectly, the management gave it to me, or appeared not to come from the original intended confirming party. I send the mail to somebody A or send the letter to somebody B, and then the response is coming from C or D. It gives me a signal that something may be amiss. Also, an electronic confirmation, my friends, process might incorporate various techniques for validating the identity of a sender of information in electronic form. For example, as mentioned in the essay, through the use of encryption, one, electronic digital signatures, two, and procedures to verify website authenticity. So typically, cybercrime can come into play where there could be manipulation of disguising the email ID where the response is coming, which I may not be able to discern in spite of my skepticism and carefully. So there could be certain ways in which those responses are masked to make them unreliable. So I have to use enhanced level of security, IT support to bring that comfort in terms of the reliability. Again, if the confirming party uses a third party to coordinate and provide response to confirmation requests. So they have, certain confirming parties may have outsourced their account payable to an organization or the HR or other aspects where I'm interacting with, or to the lawyers for some contracts or there could be bankers who may respond. So are they authorized? Are they, is their confirmation, which is not coming from the confirming party, but from a third party, reliable? So we have to then again enhance our risks to perform procedures to address that. The response may not be from the proper source, may not be authorized, the integrity of the transmission may have been compromised. So best thing, my friend, practically, if the confirming party responds by electronic mail and if I have a doubt, just pick up the phone, speak to them. Sir, did you send this confirmation to me? I have a balance confirmation from you received yesterday. Are you confirming that there is no ambiguity in what you sent to me? So that telephone call is all it takes. So I know exactly I am not dealing with something which will create a doubt. Secondly, I may again send, maybe first I have sent electronically, now I'll send in hard form so that I get a double confirmation. These are simple ways of doing it. I can, then even, or if I'm getting it from a third party, I may tell them, no, I need it directly from you if I have a doubt. And my additional audit procedures do not give me that comfort in terms of how I have been able to address this. Again, for each non-response, I have to perform alternate procedures. So again, my essay talks of examples of alternate audit procedures. For account receivable balances, for example, examine specific subsequent cash receipts. It's a simple thing. Shipping documentation and sales near the period end. So my friends, be very careful. So this does not substitute, and it is not mutually exclusive. When I'm actually verifying my data, I always see subsequent, etc. But the objective is slightly different. There may be overlapping steps in how I achieve that as well as this. But this is an independent exercise, independent documentation required, rather than just validating the debtors, creditors, etc. Again, for accounts payable, I have to examine the subsequent cash disbursements or correspondence and other records such as good received notes, etc. So here again, I'll have to be very mindful of how I'm able to address this. There are times when I am getting into a situation where I am not able to get a positive response. So there again, I'll have to also look at what are the management's assertion. So when a response is necessary, so there may be specific fraud risk factors where the risk of management override of controls or the risk of collusion may involve employees and or management to prevent the auditor from relying on evidence from the entity. So typically, I may have certain exceptions where exceptions noted in response to confirm request may indicate misstatements or potential misstatements. And when a misstatement is identified, the auditor is required to evaluate whether it indicative of fraud, and exceptions may provide a guide to the quality of response from similar confirming parties or for similar accounts. Exceptions may also indicate a deficiency or deficiencies in the entity's internal control financial reporting. So I have to be again very careful how these exceptions to the response which I have received, how I have to be treating. Each will have to be treated very differently. Some exceptions do not represent misstatement. For example, as I mentioned earlier also, my friends, the auditor may conclude the difference in response are due to timing, due to the measurements, or clerical error, which can be easily confirmed either through my own working or again reaching out to the confirming party. So this gives me a good idea of how this confirmation process is made more effective. When I get these results, I have to evaluate them. The auditor may categorize the results as follows. For example, a response by the appropriate confirming party indicating agreement with the information provided or providing requested information without exception. So it gives me a good comfort. A response deemed unreliable because it's, kind of coming from a third party, from another person, etc., or there's something which is not very clear or ambiguous, or it is a non-response, or a response indicating an exception. All these will have to be addressed differently. As I mentioned, the risk of material misstatement and or leading to fraud risk assessment will also be enhanced. Accordingly, my evaluation based on other audit procedures performed subsequent to any of these 4 responses and the evidence obtained may assist the auditor in concluding whether sufficient audit evidence and appropriate audit evidence has been obtained, and whether performing further audit procedure is necessary as required by SA 330. So typically, I'm getting into various aspects, and there is a little guidance note, which I'm just going to read a paragraph, which is very interesting. So this may talks of negative response example. The negative response form, the guidance note talks about, this is a guidance note on audit of debtors, loans and advances. So this is where similarly, where I'm looking for confirmation. So I'm just picked up a few paragraphs from there, which before I conclude this part, because essay is closed. So I'm taking reference, cross-reference, so that the entire understanding is very clear. 1, the negative form is useful when internal controls are considered to be effective. Internal controls are very effective. Or where large number of small balances are, or when the auditor has no reason to believe that the debtors are unlikely to respond. And if the negative rather than positive form of confirmation is used, the number of requests sent and the extent of other auditing procedures to be performed should normally be greater, so as to enable the auditor to obtain the same degree of assurance with respect to the debit balances. And in many situations, it may be appropriate to use the positive form for debtors with large balances and the negative form for small balances. So we could have a mix of both, actually. That could be also very much interested, can be in vogue. Then again, this debtors, I'm going to read out how to select the debtors, sample of debtors. While selecting the debtors, 1, special attention should be paid to accounts with large balances. 2, accounts with old outstanding balances. 3, customer accounts with credit balances. 4, in addition, the auditor should select accounts with respect of which provisions have been made or balances have been written off during the audit or earlier years and request confirmation of balance without considering the provision or write-off, just to see why the write-off is there. If it's a related party or a connected party, I may write off, but he may confirm. That will give me a different level of alarm, and then my procedure will change. And also, there may be a process in which I include nil balances also, because it may be nil in mine, but it may not be nil in the creditor's account. So that is also to be considered. Again, the method of selecting the debtors to be circulated should not be revealed to the entity until the entire trial balance is handed over to the auditor. Because how many debtors I'm going to reach out to, what are the sampling methodology I'm using. Once I have the list, so then, because if I reveal to the client, there may be a possibility, especially if some fraud is being masked, then I may not be able to get the entire list. Something may be left out, or some figures may change, which I'm not able to easily discern. So all this is very important, and this is for the guidance note. And lastly, we have some practical challenges. So 1, timing of the confirmation. Are we only taking for the year end, or some other period can be taken? Like for 31st March, I can even take for 28th of February or 31st of December. Gives me more time to work around this. So correctness of the contact details of the person to whom confirmation requests have been addressed. The management may not provide correct contact detail address of the concerned person. So we have to document how we ensured correctness of the contract details, address of the person to whom the confirmation was addressed. The address, contact details should be verified from the customer or the vendor master database maintained by the company, especially if there's an ERP environment, SAP environment, very easy to, and if I have an IT tool, I can directly access the list of the vendor master data or the customer master data, rather than the email being received or an Excel sheet being received from the client, which may eliminate certain items or line items which the client is anyway wanting to hide from me. So that also becomes very important. So I'll have to go the extra mile to be able to get the entire database, which is without any manipulation possibility. How and who should send the confirmation, whether it's a letter or an email? We should have the control of the confirmation process to ensure letters and emails are not delivered or recorded. So parties, banks generally do not respond, therefore auditor. So there is a sample format given in the guidance note which has to be attached. So that cannot be considered as an extra step. It is a necessary step. It may take some more time to get that authorization, get that letter, staple it, send it together, etc., as an attachment or sub-attachment, but that is important. And suppose I don't get the procedure, what are some practical ways of dealing with the alternate procedures? For receivables, we have, for FDs, we can do online balance confirmations. We have the original FD receipts. We have the interest verification. Very easy these days from 26 years TDS certificates. And one thing, my friend, you must ask directly whether the FDs or their balances has a lien or non-lien, because lien can be taken by a third party on these balances. And there may not be any disclosure or any kind of evidence available to me from my books of accounts, from my audit, to be able to close that piece. So these are some practical aspects which I have to be very careful of. And when I do that audit procedure. So thank you. We'll take 10 or 20 seconds break, maybe before we go on to SA 360, 560. Just have a glass of water.
Sir, before we go to the next topic, I have a few questions from our participants.
Right.
If you'd be kind enough.
Yeah, 1 minute. Yeah.
So like one has asked, are clients collecting confirmations on a regular basis? And what action is to be taken if it is not being done?
So
clients not received.
So the clients will also be directly wanting to confirm balances for their. Actually, this is a step which the client should perform, because they are responsible for the accurate presentation of accounts. And if that is not done, then it becomes very onus lies on the auditor. So typically on the year end, all good companies do send confirmation balances on their own. I have to obtain directly, so that's something I cannot rely totally on them, but I can use whatever results they've had and corroborate with my evidence. So my sample size may reduce, my rigor may reduce if their internal controls while sending these confirmation balances are there. So typically on an annual basis. That's my net answer.
So you just said something about sample. If suppose I have to confirm balances of around 1,000 debtors or creditors, as the case may be. So what is the procedure to select a sample? If you could give with some example.
Yeah, so it's the sampling technology or methodology has changed over the years. Now we have to have a scientific method of selecting samples, whether I use a data software like IDEA, where I use, so automatically I cannot say all large balances I'll take where 80-20 principle is applied, so that 80% of the amount is confirmed, where I reach out to only 20% of the debtors. So that was an 80-20 principle earlier used, which is a simple thumb rule, which still holds value, so that at least high value items are covered. But a proper scientific method of the sampling methodology as prescribed in the various essays have to be used. I cannot go on random sampling, which was there earlier. It has to be a due process. There are various, ways in which Benford's law, and there are certain other aspects which probably needs another, discussion. But definitely the essay is there. It gives all the ways of sampling. So whether it is 1,000, 10,000, 100, we'll have to use it on a scientific basis. Like I mentioned, even nil, even credit balances, there may be exceptions. where there is no transaction for 11 months and suddenly there is a very heavy transaction in the last week of March. These will be thrown as areas where my confirmation balances have to be included in the sample.
So that means the auditor can take the help of some expert?
Yes, experts, if you go through their essay for sampling, so there is the software available. So that's the expert for this.
Mhm. Right. And suppose the auditors have sent multiple reminders for these confirmations, but only 10% have replied or 15%, or there may be some cases where we are not receiving any reply. So what can we do in such circumstances?
So this is normally the case, actually. Unfortunately, in India, it's not so prevalent, and the robustness of response, because they feel it is their headache. Let me deal with my audit rather than somebody else's audit. Anyway, they owe me money, and if I start responding and spending time, anyway, my bandwidth of my accounts team or accounts payable team is stretched. So this is normally the case. The responses are less. So even multiple times I've reached out, I'll have to go to alternative audit procedures. That should be ready. So the key thing is that I should timely get into the zone that I'm not getting anything here. What are my subsequent repayments? What are the invoices? What is the past trend with that data? Am I able to reach? If I've sent through mail, should I send through a physical mode this time? Should I call them up that, sir, have you received my confirmation request? Yes. So please do spend 2 minutes and help me do it. I'll be highly obliged. So we could coerce, request, not coerce, but request or nudge these confirming parties to be more responsive. That's one. Two, alternative procedures like I already evaluated before.
And sir, in a hypothetical situation, the party replied, gave the figures, we finalized the accounts according to it. But then the party changed the figures.
It's an interesting question, but to be addressed on the next subsequent events, which is actually luckily a topic for today, the second topic.
So if you need a break, otherwise...
I need 30 seconds break. So
right, sir, please.
Okay, thanks.
So we'll meet after 2 minutes. So I hope the members have enjoyed and learned from this session. So we'll wait for sir to come back and give his talk on audit standard 560 on subsequent events. And maybe this question can be addressed after that.
Yeah, I'm back. Thanks. Just, Dipti ji, if you're there, tell me if I'm going too fast or, I'm kind of clear in my diction, or I'm running too fast, or I should slow down.
No, sir, I think the speed is most appropriate. I haven't received any complaint yet.
You will be able to assess also, na? Somebody, for courtesy, they may not want to give any.
But I'm there. So I can understand.
I should have asked, few minutes after my presentation had started, but since now we have that break and we are going to, I say 560 subsequent events, I thought I'll get back to you.
I don't think so. That is an issue, sir.
Okay. So, yeah, so we're 5 o'clock, so we're right on time, another 30-40 minutes, and then Q&A, and then we can have concluding remarks from the team. So, friends, thanks once again, troubling you with the essay, subsequent events, which is also very critical for my audit. Accounts close on 31st March every year. There are companies who close their balance sheet by 3rd of April, 5th of April. Reliance, Infosys, TCS, They close within the first 10 days of the closure of the financial year or the quarter. How they manage it is a wonder. I'll just spend 1 minute on that. They have a hard close. They have a process of cut-off procedures. Everything is, all the aspects of their accounting and the data flow from all over the world, or all over from the branches or factories, or from their so they are having series of talks right from January, February, March for the March hard close. When will be the branch auditors, the consolidation process, the debtors, creditors, inventories, work in progress, how physical verification is taking place much before confirmation of balances already have happened few weeks earlier. Then the cutoff procedures in terms of contingent liabilities, assessments for fraud risks, all that has already taken place even before my year end. So typically subsequent events, if I'm closing my balance sheet in 10th of April, really doesn't matter. But so of course, now listed companies have to close by 31st of May. That's a good rigor. But there's another school of thought that please give auditors more time. Don't push them to close so early. So there is another school that no company should be allowed to close their accounts before 30 days of the financial year. That means nobody can close their accounts in April. Gives them a breathing space now with the documentation requirement and the expectations of the stakeholders being so high, and which as an auditor I am unable to cope up with so easily. Give us more time to be able to do the assessment rather than get pressurized, if I can use that word, by the management, because last year we did it on 30th of April. Now I'll do it on 28th or 25th or 24th, or my competitor or my is doing it, so I should bring it earlier. Where is the competition? There is no, nothing will really happen. I mean, I don't want to push it to the last day, but give us some breathing space. So that's anyway my personal remarks. And, let's hope there is some debate on this at some point of time. There is no rush to close the accounts, but as of now, there is a mad rush to close accounts. So all the more reason SA 560 kicks in. And for unlisted companies, I have to close by 30th September. Of course, I can have AGM with lesser shorter notice, so even by 28th or 29th September. So I have 6 months. So a lot of time, for half the year has already elapsed. The next year, a lot could have happened. A lot of water would have flown under the Ganges, especially now it's in spate. A lot of floods would have, or earthquakes or fires would have taken place. And I'm willy-nilly very happy closing my accounts on 30th, on the trial balance of 31st March, unmindful of what really havoc has been created by the monsoons of the financial world as far as this client is concerned. So this particularly and only deals with my responsibility on such events. There is another SA 720, which is of recent origin, because other information is director's report, management information, forward-looking statements, which comes under, with the AGM shareholders, etc. Maybe certain other information given to stakeholders, to the investors' calls, etc. There's another way of, I have to get comfort. I have to give a comfort that, okay, nothing alarming has come, which is deviating from what I've signed. So this does not cover that. That's another, requirement, which is a new requirement. It's actually extending the work of the auditor beyond the, true and fairness opinion of my balance sheet, but nevertheless important because it's something totally radically different given by the management in the director's report to what I've signed. Then somebody has to talk about it. Objectives. Basically simple: to obtain sufficient appropriate audit evidence about whether events occurring after the balance sheet date of the financial statements and the date of the auditor's report that require adjustments or disclosure in the financial statements are appropriately reflected. So whether it affects my financial statements, a P&L or a balance sheet, JV required, or basically any disclosures in the notes to accounts or any change in the accounting policy, etc., in case going concern is vitiated, I have to obtain sufficient appropriate audit evidence, SAAE. Has to be sufficient, has to be appropriate, and the evidence has to be properly documented. Again, my objective is to respond appropriately to facts that become known to the auditor after the date of the auditor's report that had been known to the auditor at the date may have caused the auditor to amend the audit report. So this is part B. So if on the date of the audit report, 17th of August, 2023, I sign a report, but there is something before the audit report is issued, maybe in next tomorrow or day after, if something has happened, had I known these facts, my audit report would have been different. So this 560 also covers that. This is a tricky part, but the first part is the basic part where between the time of the closure of the financial audit and this thing, I'll have to look at what subsequent events actually are. Ind AS 10 events after the reporting period clearly defines events occurring after the reporting period are categorized into two, as I just mentioned. Adjusting events, as Sanjeev ji also mentioned, those requiring adjustments to the amounts recognized in the financial statements for the reporting period, and non-adjusting events, those that do not require adjustments to the amounts recognized in the financial statements of the reporting period. Maybe only disclosures or maybe nothing at all. And in certain cases, management judgment may be required to categorize the events into one or the above two category. This is developed over the entire concept of the essay. So we're not going to elaborate at this point of time, but let's be mindful of the fact that this is basically how distinguishing facts I have to make between what I have to pass a JV or not pass a JV. Similarly, AS4, Ind AS 4 talks about contingencies and events after balance sheet. This has been there since time immemorial, since I started and studied. So this is, which was the earliest standards which came into force in the early 80s. And it has stood the test of time. So basically, it talks of adjustments to assets and liabilities which are required to be made for events occurring after the balance sheet date, because that will provide additional information which can materially affect the determination of the amounts relating to conditions existing on the balance sheet date. So what are the factors which can have a bearing of the amounts relating to conditions existing? Conditions mean if there is a certain balance, certain assertion I've got of a good debt or a bad debt, or certain liabilities which I've recognized or not recognized, is that condition being challenged today because of any subsequent event? If yes, then this is triggered. However, adjustments to these assets and liabilities are not appropriate for events occurring after, if such events do not relate to the conditions existing on the balance sheet date. As on date, if there are certain things which, if there is a asset acquisition or a business transfer which is not affecting my going concern, it really doesn't bother, because as on date, my depreciation schedule, everything is the same. I'm not going to change my depreciation schedule if there is certain changes. Those are not the events I'm talking about. These are all non-adjusting events. Disclosure should be made in the report of the approving authority of those events occurring after the date that represents material changes only and commitments affecting the financial position of the enterprise as on 31st March and not today. If I'm going to draw my accounts as on 17th of August, my balances will change. Apart from the reason that there will be business flow of events, etc., debtors, creditors, cash flows, there could be certain other major aspects. I cannot relate back to 31st March. If those balances which I have confirmed, if those conditions are vitiated as on the date, then I'll have to take the rigor of SA 560. Quickly, we must go through certain key definitions. Date of the financial statement, simple. The date of the end of the last period covering the financial statements. Most likely it could be 31st of March. date of approval of financial statements. This could be slightly tricky in certain circumstances because they have conso accounts, they have board approval, they have audit committee, they have CFO sign off, etc. The date on which all the statements that comprise the financial statements, including the related notes, have been prepared, and those with recognized authority have asserted, like the board or audit committee, that they have taken responsibility for those financial statements. So the director of finance, the MD, CEO have signed on that report and given a date. Typically, date of the audit report, that normally is invariably the date of approval, but many cases it is not, and not necessarily. This is the date on which I did the report on the financial statements in accordance with 700, which is basically simply the basic essay which talks about the forming an opinion and reporting on financial statements, the mother essay on preparing these accounts. So that is my date. And there's another date which we somehow miss under the radar, the date on which the auditor's report and audited financial statements are made available to third party. So here again, I have to be very mindful of the fact, and there are certain guidance which I'll probably come to, and I have taken it from the guidance note. Actually, there's a guidance note on subsequent events, which is very important, and I should rely on that at some point of time. The dates that the auditor's report and audited financial statements are made available to the party, basically disseminated to the shareholders, to the bankers, to outside parties, like certain areas where I'm going to apply for new loans, etc. That's the time when I start sending these, and that date will obviously be not the date, could be a different date than the date of my audit report or the date of approval of the financial statements. And events occurring between the date of the financial statement and the date of the auditor's report, and fact that becomes known to the auditor after the date of the audit report, both of these categories are part of my subsequent events. So firstly, events occurring between the date of financial statement and the date of the audit report. This is the vanilla cases where basically I have to perform audit procedures to obtain audit evidence that all subsequent events requiring adjustment of or disclosure, whether it is a P&L JV or notes to accounts target in financial statements, have been identified. So I'm just going to read quickly, a couple of paragraphs from the AS, because they'll give you a much better perspective. Because depending on the auditor's risk assessment, my risk assessment, the audit procedure required may include procedures necessary to obtain appropriate audit evidence involving review of testing of accounting records or transactions occurring between the date of the financial statement and the date of auditor report. The audit procedures required, they are actually in addition to the procedures that the auditor may perform for other purposes, that nevertheless may provide evidence about subsequent events, as I mentioned earlier. For example, to obtain audit evidence for account balances as on the date of the financial statement, such as cut-off procedures or procedures in relating to subsequent receipts of account receivables. Again, when the accounting records are not up to date, now of course, everything is through Tally or SAP or ERP, and now of course we have looking at audit trails, sophistication. Earlier, there was always a delay in the bookkeeping, and the account records are not updated, or there is no interim financial statements have been prepared, or there are no minutes of the management meetings or audit committee meetings which have been held, or minutes have not been finalized by those charged with governance. Or the relevant audit procedures may take the form of inspection of available books and records, including bank statements. So I'll have to look at bank statements. I'll have to look at the trial balance. I'll have to look at the subsidiary ledgers of debtors and creditors, or the inventory sheets, or the factory records, to make up that evidence of actually having gone through the subsequent events. So there are certain examples of some of the additional matters that the auditor may consider in the course of these inquiries. For example, the auditor may consider it necessary and appropriately, one, to read the entity's latest available budget. So if I don't have interim results or minutes, etc., then I can take a recourse to the available budgets, the cash flow forecasts, and other management reports, maybe a monthly MIS for periods up to the date of the financial statements and date of my signing, or nearest thereto. That's always a tricky part. I'm signing today on 17th August, but my budgets are only up to 31st of July. So that's kind of risk I need to take and, do quickly some assessment that nothing has happened in the last 70 days except celebration of Independence Day and some other activity, and people have gone on holidays. But that apart, nothing really has happened. So I take the MIS on 31st July and I feel comfortable that this should be an appropriate and sufficient audit evidence. Similarly, there could be inquiries or extent previous oral or written inquiries of the entity's legal counsel. So I need to interact with the legal counsel, especially if there are plethora of cases, arbitration awards, or matters which are being adjudicated, whether there's something which has happened on those cases which I'm not aware about. Is there a verdict? Is there something which is verdict positive or negative? More serious if it is negative in terms of effects of debtors recovery, or some claims which are there against me as contingent, now no longer contingent. So I have to inquire directly from the legal counsel, who may be employed by the organization, or maybe a law firm where they interact with. So do I have access to interact with those? Does the management allow me to, interact with them, or they've closed the doors for interaction, so that my audit evidence is little not less established than what I would actually prefer it to be. Again, I have to consider whether written representations, so covering particular subsequent events, may be necessary to support other audit evidence and thereby obtain sufficient appropriate audit evidence. So this is very clear, my friends, that management representation is very important. I have to take for many plethora of items, but here I'll have to rely little more than normally I would in other areas of confirming sufficient and appropriate audit evidence on management representation. So this is also critical for me as far as getting the procedures performed for events between the financial statement date and my audit report. So where previously applied audit procedures have provided satisfactory conclusions, for example, the debtors recovery, etc., has taken place, or the liquidation of those creditors have happened, or there's something else which has given me comfort in terms of already concluded procedures like a review of the minutes, or interaction with the counsel has happened on certain other matters, then there is no specific documentation or extra effort required. So I'm not expected to perform additional audit procedures and not duplicate things or make matters more complicated. As I mentioned, I have to cover the period from the date of financial statements to the date of my audit report, or as near as practical thereto. I just mentioned about the Independence Day overlap. So as far as my SN 560 is concerned, I'll have to take into account the audit, my risk assessment in determining the nature and extent of the procedure. So my risk assessment, which shall include the following. One, first, what are the procedures management has established to ensure that subsequent events are identified? Ultimately, the accounts are the management. It is their duty to make sure that there is the accounts do not carry any material misstatement. Their audit subcommittee, or board have to confirm. So are there any procedures which have been formalized by the CFO, by the management, or by those charged with governance to ensure that any subsequent events have been captured? Again, where might affect inquiry with the management or those charged with governance where subsequent events have occurred. So here again, I'll have to look at what the AS says. These specific inquiries can include many aspects. For example, as given in the essay, I'm going to read them out for you for brevity. Whether any new commitments, borrowing, or guarantees have been entered into. So I inquire, I write to the management whether any new commitments, borrowing, or guarantees have been entered into. Two, whether sales or acquisition of assets. So assets, which is a major, immovable asset in the balance sheet, whether there's any sales or acquisitions have occurred or as planned, so which can, have a bearing on the condition of those assets as on 31st March of the year. Again, whether there has been increase in capital or issuance of debt instruments, such as the issue of new shares or debentures, or agreement to merge or liquidate has been made or planned. So merger, liquidation, issue of ESOPs, there can be so many things which can affect my EPS, my diluted EPS, may have a bearing on accounts as on 31st March. I can inquire into those. Again, whether the assets have been destroyed by flash floods in Himachal Pradesh, a factory just washed away. What do I do? My factory doesn't exist. I am looking at going concern. It's not going to work for me. I'll have to be very mindful of the fact that I make this inquiry from the management. Unfortunately, there could be certain discharge, fire, floods, natural calamities, or any other government, ban on certain, if gaming is banned in Tamil Nadu, online gaming, and that's the only state I actually work with, then there's no business for me. Am I no longer a going concern? I have to inquire whether there are any developments regarding the various contingencies, contingent liabilities, etc., or they have contemplated or have made any unusual accounting adjustments where, where the serious tax liability has come, which is bearing on 31st March, or whether any events have occurred or likely to occur that will bring into question the appropriateness of accounting policies used in the financial statements, especially the going concern concepts. So I know cases where the environmentalist or the environmental tribunal has said that, there is a pollution happening to this river because of the effluents which have been there, and so you no longer can produce until you are able to rectify or invest in, change your product, etc. And I have no other product to work on. I have no other technology to rely on. So my business is finished. Happened on 10th of August. 31st March balance sheet, true and fair, going concern, cannot work. I'll have to inquire from the management. What are the implications of this? Am I going to the tribunal or the Supreme Court or the High Court to get relief? What disclosures I need? What qualification I may need in my audit report? All that is very important for me. And if there is any subsequent interim financial results like 30th June, Q1 results, etc. available to me, why not? I'll have to recourse to that. So basically, I have to request the management and wherever appropriate, those charges governance. These terms are interchangeable, but if there are independent directors, then those charged with governance are different from the management. So it's more of a technical story, especially for listed companies or other such companies. So I have to provide a written representation. They have to provide that all events occurring subsequent to the date of the financial statements and for which the applicable financial reporting framework requires adjustments have been made. So basically, this is following SA 580, that written representations actually become very relevant. More than, probably the earlier standard, essay which we're looking at 505. Here it becomes more relevant for me. So I have to be very careful how I word these representations, how to whom it is addressed. Normally, representations are not received till the signing date, or sometimes even after that. So that may not be acceptable, because then that's one, not a good audit step. Two, one, I may leave something which may have a bearing on my accounts. Factors: when the management is not required by the applicable law to issue amended financial statements, but the auditor believes that need to amend it, then if the audit report has not yet been provided to the entity, if the report is not given, it is my report. I've signed it, but I've not emailed it to anybody or not given any hard copy. Definitely, I can modify it. I have no problem in modifying it. SA 705 allows me. But if the audit report has already been provided to the entity, and the auditor shall notify the management and those charged with governance not to issue the financial statement to third parties before the necessary amendments have been made. So this is something I'll have to look into. very carefully before, immediately I have to work kind of, if in the night I realize something is wrong, even I cannot wait till morning, I'll have to reach out, tell them by telephone, stop distribution, and then of course follow by mail. Facts which become known after the audit report, but before. This is very interesting because audit report has been issued, dated, it's been signed. So after the date of the signing of the audit report, I have technically no obligation because that's done and dusted. I have done what I had to. I have been a good auditor, kept all my documentation, followed all my India's accounting standards, all my quality control, peer review mechanism, all has been placed. Something has happened, I am not obliged to change. But there is a catch. A fact becoming known to the auditor that, had it been known to the auditor at the date of the audit report, may have caused the auditor to amend the audit report, then I'll have to do 2 or 3 things. Discuss the matter with the management, and where appropriate, those charged with governance, when the independent directors, etc. are there, determine whether the financial statements need amendment, and if so, inquire how management intends to address the matter in the financial statements. Typically, they have to take forward, how they have to, are they going to disclose this in some way or the other? So if management amends the financial statements, then of course it is simple. I carry out the audit procedures necessary in the circumstances of the amendment, extend the audit procedures to the date of the new audit report. So audit report 17th of August, audit report 20th of August. On one particular item, I'll have to mention that as emphasis of matter, etc., or provide a new audit report to the and the shall not be dated. This audit report, of course, cannot be dated earlier than the date of the approval of the amended financial statement. So 17th, 14th, the management signs the balance sheet. 17th, I issued my audit report, and then tomorrow something happens, and then they revise the financial statements on 19th, and my audit report cannot be 19th. It can be 19th. It cannot be 18th. It has to be 19th or say 20th. Just be very careful of that. But so if audit report before the financial statements are issued, there it becomes easier, because then I have to, it does not prohibit. So where laws and regulations of the financial, normally you can change, if the AGM has not happened, then I can change the accounts. The Companies Act does not prohibit me. So there's no provision for restricted the amendment of the financial statements to the effect of these subsequent events or causing events of the amendment. So this fact can be always there, that I can amend as many times as required. It's just, these are not regular. Every audit, every balance sheet, hardly there are cases where after my audit report, but before financial statement, these are very extraneous circumstances. But I have to be mindful that they can arise. And in the fast changing dynamic world, I have to be conscious of these things. Without that, it's going to be very difficult to control such cases, because these are the tricky ones. And if the tricky ones are going under my radar, then I don't want to be caught in a situation where it could have been done, but somehow I didn't know how it was to be done. That is why the SA is going to come into my protection, give me my support in terms of how I will carry it out. So I can either amend the audit report to include an additional date, restricting to that amendment and saying that, okay, subject to note this, which is after my original audit report, and saying that only this part is a new report, a new paragraph, and thereby indicating that the auditor procedure on subsequent events are restricted solely to the amendment of the financial statements described in the relevant note to the financial statements. This is normally not the case. Normally, I will go for part B, practically, if I see it. Provide a completely new amended audit report that includes a statement in an emphasis of matter or other matter paragraph that conveys the auditor's procedures or subsequent events are restricted solely to the amendment of the financial statements as described in the relevant note of the financial statements. So rather than complicate matters where I talk about how only this one line item of the P&L account or balance sheet has been amended, and give us kind of a revised report on that. I create a full new report where emphasis of matter or other matter, I clearly specify that as defined in note number XYZ, because of this fact that there is, destruction of a particular asset due to the ongoing floods in Himachal Pradesh, the existence of that asset is impaired, and I want to make a disclosure of that. That itself is very important for me. So once the financial statements have been issued, I have, as I mentioned, no obligation. And then already mentioned that I'll have to discuss this with the management. How are they dealing with it? So there's a paragraph on this in my essay. I would like to just read out for the benefit of, I think I have a little time, so I can do that. Then we can go to the other aspects. Basically, page 8 of the essay, para 17. I've marked it for all of us. Yes. If the management does not take necessary steps, very important, what do? They don't want to do anything to ensure that anyone in receipt of the previously issued financial statement is informed of the situation. It does not amend the financial statements in circumstances where the auditor believes they need to be amended. The auditor shall notify the management in writing, and unless all of those charged with governance are involved in managing the entity, those charged with governance, that the auditor will seek to prevent further reliance on the audit report. So I just disclaim, please, I'm telling you, putting you on notice, please do not rely on my audit report. And if in spite of such notification, management or those charged with governance do not take the necessary steps to inform the shareholders that do not rely on this audit report, because there is some material events which actually have a bearing on my 31st March accounts, then I have to take steps like prevention, take legal recourse. What I have to do, can I write to the shareholders directly? Can I write to the bankers? Can I give a press release? There are various ways to handle this, but it's more of a legal and a complicated matter. And of course, the essay doesn't deal in detail with that, but the fact that these circumstances are very rare and can be, but can arise. So therefore, be very careful if certain circumstances arise. Take help from some legal experts who have dealt with these matters earlier, because there are certain challenges. How I have to work on this aspect. So more or less, we've covered the entire essay, but practical challenges. So how I overcome this? What is something which is affecting, not affecting? How I can quickly get into the thick of things. I'm auditing the last year's accounts, spending time on that. Suddenly I realize that next 4 months, I'm not going to start any vouching. Do I understand the business of my client? That is very important. I must understand their operations. Are there any significant developments, any press release, any grapevine, any documentation which has come to my notice, which is giving me a signal that, oh, yes, I'm going to make a representation to the management that, okay, I'm in knowledge of this particular story. Please confirm whether it is, going to affect my account for the year. Then the key part is materiality. Whether a subsequent event is material enough to warrant disclosures or adjustments. This is a subjective matter and might involve professional judgment. Definitely, all aspects do. But here, materiality plays a larger role than in normal circumstances. The biggest problem here, my friends, is the timelines, the reporting deadlines, as I talked about in the beginning of my discussion. This can be challenging, especially in this, especially if the events are very close to the issuance of the financial statements. So what is the available information? What is the reliability of information? Is there a management bias, as they don't want to get into this now? Already accounts are closed. They will deal with it or somehow manage it in the subsequent financial year, maybe till March next year, 24. So they said we will deal with it. I don't want to, bring an alarm to my bankers or shareholders or my JV partners if something radical has happened, which as in normal course, I would have had to disclose to them. I'm just kind of, maybe I'm kind of manage it or get a stay from a court or certain decisions. So I have to be very vigilant to detect any attempt to misrepresent the financial position. So when I get these assertions, I have to be very specific what my questions are, and I have to be very specific that the management, without any ambiguity, is giving those answers and not putting under the carpet. वो छुपाने की कोशिश कर सकते हैं. So management representation is one, but I anyway have to complete my working paper, my documentation, my process of my own inquiry and my analytical procedures. All will have to be combined to reach to a conclusion whether any adjustments are required in the disclosures or in the financial numbers. These documentation should clearly demonstrate that the auditor has fulfilled their responsibility. Sometimes complex transactions, specialized knowledge, expertise, like I said, you may have to recourse to your own legal counsel or an expert to consult the potential impact and implication. And main thing is how it will affect the user of these financial statements, all the stakeholders. The disclosures provide a relevant and understanding of the information. Basically, it should bring out very clearly why I'm actually using this standard to actually make a disclosure or making an adjustment in the accounts. Without that, it becomes the whole objective loses its significance. So my friend, very important. One, till I sign my report, I do normal audit procedures to see what has happened to those conditions of those asset liabilities or any disclosures which I've made. Are they going to getting into any kind of a change which is therefore required, or something which is signed and not issued? There a small time frame, but that's also possible. And also, once they have been issued, then what the management is doing about it, because the onus is on them. I have to do nothing. But if they don't do it for certain reasons which are, I'm not comfortable at all, then I have to go in a very firefighting mode, not as an auditor, but as a legal. I'll have to take legal recourse and go beyond my brief. So typically that's a rare situation, more of a dispute or a disconnect, but definitely on a normal process, SA 580 does require on materiality, on my assessment of what has really happened during this period, which will have a bearing on the accounts as on 31st March. Thank you, my friend. I think I've closed my deliberation and I close my presentation. And over to you, Dipti ji. Thank you.
Thank you, sir. Thank you for the great talk. And can we proceed with the questions? A few questions I've received.
Please.
So one was the last only, which you said you'll take it after this session. What if previously the party confirmed the balance? We did the audit with that balance only. And later on, the party changed the balance.
So it comes under section 5, SA 560. Definitely changes the balance. I need to know why they changed. I'll have to do some additional audit procedures. Let's take an example. I have a debtor balance of 1 lakh. Party confirms that no, I have to pay only. I confirm that they have to pay 1 lakh, but later on they say no, I have to pay 80,000. I suddenly realize there's a dispute of 20,000. Then I have to ask them, why did you? I can correspond with them. 20,000, are you referring to any specific invoices which you are disputing because the quality of the good was wrong, or there was a delay in delivery, or there is certain other matter which I'm not aware of? I have to get to the merit of that. If that be the case, whether I have to issue a credit note or make a provision for bad and doubtful debts, or I realize that the management has a good case covering those 20,000. And definitely I can, and it's too early for me to make a provision, then I may not do anything. Hello, there's some, I think, there's some
coming from the technical room.
So my audit procedure
I didn't get you.
Yeah, no, so there was some disturbance, sorry. So it could be that I don't have to do anything, but I document why I don't have to do anything. I have a good case, it's only 1 month, and they're disputing wrongly because it's a frivolous reason for the change. 2, it could be a genuine reason for the change. And the management, when I confront the management, they agree, okay, now I'll give a credit note. Then that's the debtor balance is incorrect. I'll have to revise my accounts because of that. And if it is material. And thirdly, if there is a bad or doubtful debt provisioning, and if the audit report is not done, I can make the provision and make a JV. And if the audit report is done, but before it is issued, then I can change the accounts if it is so material that I need to actually go into the account. So it's all so my effort to come to a valid conclusion can only enhance when there are certain disputes like this.
So a question has come to my mind. Auditor all the procedures in obtaining confirmations, everything he did according to law, finalized his audit report only after receiving the confirmation, closed the audit and everything. And later on, an action was initiated against the auditor when the client books were maybe audited by some other party. So what will be my liability at that?
So, ma'am, the only way which my insurance policy is my working papers. मैंने काम ठीक करा. Audit is not required, is not expected to unearth every fraud which is perpetrated by the management. If there is an indication of fraud, I have to enhance my audit procedures. SA 240 is very clear. But definitely, there are frauds which will go under the radar, especially if there's a connivance with the management and third parties, etc. And it is cleverly masked. So my only defense is my working papers, my peer review mechanism, my following of the quality control manuals, and my skepticism inquiries, as well as a clear audit step-by-step procedure to carry out the audit. If that be the case, there could be certain circumstances where maybe a special audit is ordered by income tax. They may unearth some bogus payments, but it may be beyond purview of a normal audit to have unearthed that. So I'll have to defend myself with the kagas I have, nothing else. And of course, I should be confident that what I've done is something not only by the books, but as an auditor, as the Institute logo says, I'll have to be awake even if I'm asleep. So my sense should be there that, something amiss, which could have come to my knowledge even while collecting the audit evidence. I have actually done that activity.
So these subsequent events are applicable from 1st April, after the books are closed on 31st March, and they're applicable till the audit report is signed. In case of consolidated accounts, like the holding company has many subsidiary companies, किसी की audit report was signed in August, somebody's July, but the main audit report was consolidated only on 30th September. In that case, individually, what will be the this timeline?
So a good question, and I'm not getting into the fact that I would expect those auditors, if it is audited by other auditing firms, to carry out the same procedures. I can write to them if I suspect that the audit subsidiary or the associate is very material. Typically today, when I carry out the audit, there is a requirement to get a complete comfort, whether I'm auditing it myself or through detailed inquiry by a questionnaire which I send to the auditor, have a dialogue with them, that I cover 80% of the transactions, revenue, expenditure, asset, liabilities. So I have a very large and a high level of comfort as to the operations of those subsidiaries, etc. So I really know that whether certain aspects can be there, which in those subsidiaries are subsequent events, I can take written representation ask the management of the company I'm auditing to reach out to the management of those subsidiaries to confirm to me directly that nothing has come to the knowledge as a written representation that subsequent events which are affecting my balance sheet date have taken place or not. I can also ask the auditors who have actually signed the results to do that inquiry for me. I can do it directly. I can do it through them also.
And sir, last but not the least, can you state some practical real-life examples of events occurring post-balance sheet dates where account adjustments was done in the financial statements and some cases where adjustments were not done?
So very simple, like I mentioned, if there is a destruction of assets or going concern, or there is certain, aspects which actually materially affect my balance sheet, all that comes into this. But in the influx of my business, if there are certain events which are, in the normal course, if there are certain category of events where there is a dispute which is ongoing and there is an outcome of the dispute, I may bring it. I may just disclose it in the notes to accounts. I may not make the adjustment, or I may actually make the adjustment. It is a question of materiality. It is a question of my professional judgment, and it is a question of how relevant it is to the readers of the balance sheet.
Right, sir. Very much highlighted and knowledgeable at the end of this discussion. So on behalf of ICAI, thank you, CS Suman Chadha ji, for your valuable time and expertise, and hopefully in future also. Probably I'll be seeing you sometime in person also. I really like to call you at my branch for a session, if that would be possible.
It would be a privilege, ma'am.
No, so it will be my privilege only.
Thank you.
So I think ICAI team, please kindly.
Thank you, sir. Thank you so much, sir. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountants of India, for sparing your valuable time and acceding to our request, of course, on a very shorter notice for these two very important standards. And continuously, you have spoken for 2 hours, sir, and you have justified with both the presentation 505 and 560. Frankly speaking, I have gained a lot through your deliberations, sir. Hope our members have gained a lot through your deliberation, and in a very, very, very lucid manner and a very detailed manner. So thank you so much, sir, once again on behalf of AASB of ICAI for enlightening all of us on various intricacies of both these standards, sir. Thank you so much. And I also extend my warm thanks to the Honorable Chairperson of Ambala branch of NIRC of ICAI for sparing her valuable time, as well as for the continuous support for 2 hours, as well as co-hosting this webinar. So on behalf of AASB of ICAI, we extend the heartiest thanks to the Honorable Chairperson of Ambala branch, Madam Deepti Jain ji. Thank you so much, ma'am. Thank you so much, sir.
Very much.
Namaste.
Thank you, Anil ji, for giving the opportunity, and of course, Sanjeev sir and Deepti ji to be here. And it's a pleasure to be part doing something. I hope it was useful to the audience. Feedback from Anil ji would be very appreciated.
Yes, sir, yes. Thank you, sir. Thank you so much.
Have a good day, everybody. Stay blessed and happy auditing.
Thank you, sir.